Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today we got some more news, some interesting stuff going on with Bittrex. We're going to talk about the price a little bit too, and I just felt like starting off a video with a fidget spinner. I don't know why. My last video I was talking about the price and how it shot up very, very quickly. And it seems to be staying for now. However, some coins are not doing too well. We had a slight dip a little bit ago, and now it went back up a little bit down. So here's my thoughts on this. Is that it kind of looked like a dead cat bounce at first. So for anybody not familiar with that hyperbole, it's just basically when you see a bounce after a dip and it's likely to go back down after that. Now, is it going to or is it not? Well, nobody knows at this point. But usually when you see a nice, huge jump like that within the course of just an hour or three, in this case, usually it's likely to go back down. So either way, again, as usual, I like to look at things positively. If it goes back down, well, I'm just going to buy some more. And if it goes back up, well, awesome, because everybody's portfolio is worth a little bit more. So we can take a look at the price of Bitcoin here real quick. It got down to about 7,300 there, and within a few hours it reached to about 8,300 or so and stabilized for a little while. Took another little climb, if you will, to 87.52, and we're down just a little bit. Just remember though, if you look at the long term, if you look at a one-day candle chart here, you know, you're still seeing some decline here, and it's still going down overall. It looks a little different with the Litecoin chart, still going down overall in time here, and Bitcoin kind of the same, starting to even out just a little bit, that EMA. So maybe we are on a nice reversal of our roller coaster of cryptocurrency that we're on. So one thing to look out for on graphs is when you start to see candles going each and every way. So you can see how you can see candles on both the bottom and the top, rather shadows. And that usually signifies that the market is sort of stabilizing because people don't know whether to sell, people don't know where to buy, and everybody's sort of meeting in the middle. So there's spikes, there's dips, but everybody's meeting in the middle. So that means it's sort of kind of stabilizing, and it's going to go one way or the other after that. So a little bit of a stabilization for now, but we'll have to see later on. So it's a very, very hard time to predict what's going to happen with crypto. There's a lot of positivity in crypto, and at the same time, there's a lot of negativity right now, and I have some of those news articles of the negativity right now, but we'll have to see. So I'll keep you guys informed of what happens. So moving on here. Bittrex will remove 82 tokens due to lack of liquidity in small cryptocurrencies. So Bittrex, one of the largest cryptocurrency exchanges, which also powers Upbit, South Korea's second biggest exchange, operated by the Kakao subsidiary Dunamu. Wow, intense. Has stated that it will remove 82 tokens from its trading platform. So token removal, occasionally there are circumstances that lead Bittrex to remove a coin's wallet and market from the Bittrex exchange. We will be removing the wallets included in the list below on March 30th, 2018. And once these wallets are removed, we will no longer be able to recover these coins. So users must withdraw their coins before March 30th, 2018. So the Bittrex team has also stated that several cryptocurrencies have had broken blockchains that have disabled users from withdrawing their balances. So the coins marked with an asterisk have broken blockchains or wallets that will not allow withdrawals, said Bittrex, referring to cryptocurrencies like Crypt. So on leading platforms, it's difficult to say, or it's difficult for exchanges to sustain a stable order book if cryptocurrencies do not have enough liquidity and demand from users of the platform. Lack of liquidity leads to price manipulations, which can be initiated with funds as little as $50,000, as shown in the recent study done by cryptocurrency trader Sylvan Ribes. So by using a method called slippage, a process of selling 50,000 worth of a particular cryptocurrency on a trading platform to measure its impact on the price, Ribes evaluated the liquidity of digital assets on major exchanges like OKX and GDAX. While GDAX had a slippage of less than 1% on OKX and other cryptocurrency-only exchanges with low market cap or volume cryptocurrencies, each sale of 50,000 led to a 2 to 10% drop in the market value of cryptocurrencies. So Onto this is the official here from Bittrex, so wallet removal on March 30th, and it basically says the same thing, that they're removing some of the very, very low volume / liquidity coins, and some of these coins you will not actually be able to recover because the blockchains are physically broken. So that is not a problem that Bittrex is experiencing. It's an underlying problem caused by the blockchain or the wallet associated with that coin. So I will put this link here in the description of the video for you guys to check out, because if you have any of these coins on Bittrex, you may want to get them off immediately, because you have just about 10 days or so to get them off of the exchange. Now, most of these are very, very ultra rare altcoins or shitcoins, if you will. So the ones marked with an asterisk have a broken blockchain, so you will not actually be able to withdraw them. So what that means, unfortunately, pretty grim. You won't be able to remove them. You likely won't be able to sell them. And if you can sell them, you should sell them immediately, because everybody else is probably doing the same thing, which is just absolutely destroying the price of them. So, for example, I brought up a few of these example coins here. I brought up Triangles, which is TRI, which is not too bad. It's a $6.79 coin, but has a market cap of $729,000. And had a spike there. It looked like a pump coin, perhaps, and going down, but it is going up a little bit here. Looks like in the recent 7 days. So not too bad. So get that coin off there for sure. Might be able to sell it somewhere else. Again, just go to the market caps and you can see where they're at. So it's only on Cryptopia at the moment. So perhaps they delisted it from CoinMarketCap already. So interesting. I actually read a lot of articles on this, and some of the comments were basically like, I've never even heard of these coins, and honestly, I really haven't either. So I doubt that most of my viewers will have coins like these on Bittrex, but it's good to know. And just in case you log on one day and be like, what happened to all my triangles? Who got my triangles? I must have been hacked for my triangles. So I don't know what this coin does, and to some degree, I don't really care. I mean, triangles, it's a cool name for a coin, I guess, but I don't know what it does. So another one was Darkus. It's DAR. It's worth about 12 cents. Has a market cap of 1.7 million though, so that's nothing to shake a stick at, I suppose. It's not doing too hot in the market. And again, you can check the markets here, and it might not even say, no, it says Waves Decentralized Exchange. So right, so again, these are super altcoins. And then we have one of the asterisk coins, which is Hyper. And you can see its circulating supply is just question mark, and its market cap question mark, and markets that it is trading on is Yobit for $26, volume question mark again. So if this coin is on Bittrex, you pretty much lost it. If you do actually have this coin still on Bittrex, you might want to sell it immediately and just pick yourself up some Bitcoin or something like that, something different. So yeah, make sure you guys check this link if you do have Bittrex, and if you are trading some kind of obscure altcoin like these, make sure you get them off there. So we'll close up some of these, and got to reload some of these tabs here. That's okay. So Ethereum's ICO whales can crash the market at any time. So before I get into this article, I'd just like to say that I was live streaming earlier. And this is actually a coincidence, because I was sort of talking about this same thing, however, not specifically Ethereum. I was basically saying that market manipulation is pretty easy in the crypto world, because while it seems like the market cap of all the coins of cryptocurrencies is rather large, which to some degree it is, hundreds of billions of dollars all combined, possibly maybe $1 trillion. I suppose you could do the math, but it'd be quite a bit of math. You'd have to add up all the coins and see. But either way, it's quite a bit of money. However, it pales in comparison to the rest of the world, comparing to the stock market, dividends, property values, and everything in between. So when it comes to whales, or millionaires essentially, if you slapped $1 million into Bitcoin on GDAX, you would probably, although GDAX does have a pretty high market value, or pretty high volume, but some of these smaller exchanges, you could easily raise the price by probably hundreds of dollars at least by throwing $1 million at Bitcoin or Litecoin or something like that. Maybe not so much Litecoin or some of the lower price coins. However, so you can easily put in margin trades and then buy a bunch of coins. And so like essentially like margin, like a long or a short term position yourself with margin trades and then buy the coin, pump it up, then sell the coin, let it go down, and then, short yourself with a margin position and buy coins at a very, very low price. So very easy to do. And it is visually seen often on exchanges. If you see just within a few minutes the price rise by hundreds of dollars or thousands of dollars, most of the time it's just a few people and not necessarily everybody. So then everybody else piles on to the price, which raises it even further, and then they sell it off several hours later when it has sort of leveled itself out, if you will. So they sort of paint a bull flag, and then they just sort of let it drop when they sell it. So crypto whales are generally thought of as wealthy traders with the ability to move markets via a single sell order. Yet the greatest whales of all aren't traders but ICOs, which own millions of Ether worth billions of dollars. Over 3% of the total Ethereum supply is estimated to be in the hands of ICOs, and when those projects cash out, as periodically happens, the effects can be dramatic. Ethereum is at the mercy of ICOs cashing out. On Sunday, while the crypto markets were enduring yet more turmoil, Ethereum took a sudden nosedive, going from $516 to $464 in under 2 hours. Up until then, it had been one of the more stable coins compared to alts still in the experimental stage, which have absorbed the worst of the losses. Ethereum's flash drop made it one of the worst performers in cryptocurrency top 100 yesterday, shaving around 16% off its valuation. The cause of the sell-off has been attributed to one of last year's ICOs, offloading a significant portion of its Ethereum reserves. If so, it's not the first time something like this has happened, and it certainly won't be the last. So you might wonder, well, how can all of this be avoided? Well, a lot of the times people are just sort of impatient and greedy, and they set a market sell. And when you set a market sell, it sells it right now. It sells it right now to anybody. It doesn't just sell it. Let's say Ethereum is at $1,000 for just even sake hypothesis or whatever. For an example, struggling for the word there. And you do a market sell, and you have hundreds of Ethereum. Well, it's going to sell the first Ethereum for $1,000, and then it's going to sell the next Ethereum for $999, and so on and so on. Of course, in terms of pennies, but so on and so on, all the way down until all of 1,000 of your Ethereum has been sold. So likely, by the time your last Ethereum is sold, maybe you sold it for $900. It's like I said, it's going to sell it all the way down to whatever buyer and any buyer. Is that going to be the case every time? Maybe not. It's just a crude example. But instead, they could set limit buys in these small little orders, or you could stagger your orders, sell some for 900, sell some not for 901, sell some for 905, just stagger them around in a better way so that they get bought up in little small portions so you don't actually start to crash the market downwards, and also you would make more by doing that. Also, you can auction them, you can sell them to whales, that sort of thing off of the market. But instead, a lot of times these just sort of get slapped on the market. They get sold instantly just for quick funds for the company, and they're done with it. So deducing the total amount of Ethereum that has been invested in ICOs is relatively straightforward. Around 2/3 of the $5.7 billion raised by crowd sales in 2017 was in the form of Ether. These projects are obliged to sporadically cash out their holdings for fiat currency to cover expenses that can't be paid in crypto. And when they do, it makes sense for those projects to withdraw a lump sum. What's good for them isn't necessarily good for the market, though, especially traders whose longs are wrecked by a sudden dump of Ethereum. So fear of the whale, cryptocurrency markets are much less liquid than traditional markets. When hundreds of thousands of Ether is sold on the open market, typically via an exchange such as Bitfinex or Kraken, it will instantly depress prices. Traders even are ever alert to even the slightest signs of market movement are skittish creatures, and even the possibility of a coming dump can be a case for concern, as evidenced by the recent fears over the Mt. Gox whale dumping Bitcoin en masse, even though those fears have since been wow, I don't think I've ever seen that word before, and I always consider myself to have a very, very high vocabulary. But those fears have been put aside since that Mt. Gox dumping, and quite frankly, I'm not convinced that they were put aside, essentially. He announces after the fact that he did this, that he's selling, that he sold it in a better way that didn't affect the market. Yet everybody's sort of seen it in these market dumps, not necessarily from that person, but there were these huge, massive market dumps, every few days or so in those 2 months. And, odd that they sort of correlated and timed quite well to the Mt. Gox dumping. But, who knows? No, I think nobody knows at this point, and maybe he was just trying to save face, and just be like, oh, no, I didn't do it that way, but really he did. But either way, the market crashed regardless in the end. 12 hours before Ethereum dropped on Sunday, US moved 50,000 Ethereum to a Bitfinex address. It is impossible to determine when the entity sells the funds they have moved to a cryptocurrency exchange. The deposit only indicates intent to sell. Contribution addresses of major ICOs are monitored by discerning traders. However, and thus, when a crowd sale transfers Ethereum to an exchange, it can be a self-fulfilling prophecy that serves to deflate prices. So I was also talking in my short live stream that I did today that it's ironic and interesting that we all tried to get away from not necessarily get away from fiat currency, but the whole idea that the general consensus of cryptocurrency is that it's decentralized. We don't have to deal with the banks. We don't have to deal with the government. We can just have our own crypto, our own funds on a zip drive, or a Trezor, or on the blockchain, or on a wallet, this, that, or the other thing, however you like to store it, and it's yours. I know some people say that if it's not in like a Trezor wallet, it's not your Bitcoin, but whatever. Let's just get past that for now. And so we all try to get away from that. Yet at the same time, there is no economic situation. There is no economic way to get around essentially whales, rich people. And I'm not saying anybody with money, manipulates the market or does malicious things to markets. It's not necessarily true. But what I am saying is that there'll never be an economic situation where rich individuals will not play a huge factor and always get ahead of you. Even if there were no such things as exchanges for cryptocurrency, and it was just mining and just people sending back and forth to each other to buy goods and services, in mining. So, you would have your few video cards, but somebody with $1 million would have, thousands and thousands of video cards going on, and they would just beat you no matter what. So no matter what, we'll always run into this situation, the fear of the whale and market manipulation. It's just going to be a way of life. Hell, even in communism, there were still rich people that lived in mansions while everybody else, wallowed in the fields, if you will. So no matter what economic situation you have, there's always people at the top and there's always people at the bottom. So it goes on to say that at least 3.4% of all Ethereum is locked up in ICOs. One crypto trader professes to have seen figures showing 3.4% of all Ethereum, or around 3.4 billion coins, are in the possession of ICOs. And when these projects have bills to pay or fear that the market is likely to deflate further, they feel obliged to cash out. And these whales are under no obligation to sell OTC. Using a trusted exchange is generally the preferred route. All of this creates downward pressure on Ethereum on a scale far higher than that faced by any other crypto asset. For so long as Ethereum remains the preferred fundraising platform for ICOs, the cryptocurrency will remain concentrated in the hands of 100 or so projects, each with the power to offload on the market at any time. In each instance, these markets will recover, but not before some traders, especially those using leverage, have absorbed heavy losses. And that's why we don't margin trade. Every cloud has a silver lining, though, and when major dumpage occurs, it's a prime opportunity for other traders to scoop up cheap coins before the price rebounds. So that's something that I can definitely agree with, because that's kind of how I think. Let's take this. Let's do it. Let's take this coin here. All right, let's get
a swage.
A swage. Oh wow. Make or less intense. A swage. Is that French or something? Ooh, man, I'm not sure. I'm not good at French. I think that's French. That's got to be. So next article here is kind of a fun one. It's not much of a news, if you will, but it's still fun. So find real BTC rewards roaming 3,000 levels in a new Japanese mobile game. So how do I feel about Bitcoin and crypto being in games? I like it. Why not? I still feel that like if like some game, you know, like big MMORPGs or RPG games that you play, you know, like online, would have cryptocurrency instead of the gold, I think that would be amazing. Like I think if World of Warcraft turned all of its gold into cryptocurrency, and that would be amazing. So you know, as you're playing the game, you're actually physically farming the currency, and you know you can trade it around in game. You could also combat inflation by, again, like when you need to repair your armor with an NPC, that's gone. Like nobody actually gets that gold like when you repair your armor. So I think that's pretty cool. That would be a really great idea. But there's a Japanese Android game iOS called Itadaki Dungeon. Again, a Japanese and French I'm terrible at. That allows players to earn small micro bits of BTC while venturing through 3,000 underground levels. The free game is a 2D course filled with weapons, special items, and crypto treasure. So the game has a 4.1 rating on Google Play and iOS, and has some decent levels on the platform alongside positive reviews on other forums. For players familiar with the games Itadaki Street and Dragon Quest, the entertainment is quite similar. Test your skills in an expansive dungeon with 3,000 underground levels, explains the developers. I swear they just test me with these news articles. They're like, let's just throw a bunch of Japanese stuff in here, and then I think MrSotko is going to read this article. It'll be really funny. It'll be really funny. We'll watch the video afterwards and see him struggle with these like goofy names. Like those are three consonants in a row. That's three consonants in a row. How am I even supposed to pronounce that? You get out of here with your triple consonants. So just like other games, Itadaki Dungeon will attempt to attract players with millibitcoin rewards. The game is free, but don't expect to be a Bitcoin millionaire overnight. When playing the mobile game, as the game's reviews say, you got to play a lot. Of course, it's to earn small fractions of Bitcoin. So kind of cool. I haven't actually played it yet. Maybe I will, just for fun. But the only problem is like with that low of Bitcoin, you probably couldn't even cash it out till you have a whole bunch of it anyway. But you know, for those of you that like mobile games, might be kind of cool to check out. So here we go. U.S. President Trump bans U.S. citizens from buying the Petro. In case you guys don't know, the Petro is the Venezuelan-backed cryptocurrency. And so President Trump of the U.S. has banned the Venezuelan government-backed cryptocurrency, the Petro, by executive order, Bloomberg reports. So I don't think... I would be willing to bet that President Trump didn't say, oh, you can't buy the Petro necessarily, but by sanctioning Venezuela itself, likely banned the actual buying of the Petro because it is Venezuelan. So, you know, we'll have to see. We'll check out the rest of it. But first of all, why does Maduro look like Stalin? Man, he looks very, very similar to Stalin. He looks like a more healthier Stalin. You know, like Stalin's younger brother. He really does. The ban reportedly comes as part of a campaign to put pressure on the Venezuelan government of President Nicolas Maduro. By order, U.S. citizens are banned from engaging in transactions using the oil index digital currency. The ban frustrates the efforts of Maduro's government to boost foreign currency reserves. The token offering accepted transaction in U.S. dollar and euros, meaning the Venezuelan citizens could not legally participate, as there is a ban in Venezuela on buying foreign currency. So that makes sense, right? The order also authorizes U.S. Treasury Secretary Steven Mnuchin to issue regulations to enforce the executive order. The Treasury Department announced sanctions on 4 Venezuelan government officials. So maybe they did specifically sanction this particular cryptocurrency, which I suppose looks like it hit my fidget spinner. According to Mnuchin, President Maduro decimated the Venezuelan economy, spurred a humanitarian crisis. Instead of correcting course, the Maduro regime is attempting to circumvent sanctions through the Petro digital currency. Treasury Department warned investors on January to avoid the Petro, calling it another attempt to prop up the Maduro regime. Oh, America, get them, I guess, while further looting the resources of the Venezuelan people. The Petro has struggled in finding legitimacy and interest among foreign governments. Earlier this year, the Venezuelan government claimed that Poland was interested in trading food and medicine for the Petro, which was later denied by the Polish Ministry of Finance and Ministry of Foreign Affairs. Cambodia, however, seems to have taken inspiration from Venezuela and is considering its own state-sponsored digital currency, Entepay, Cointelegraph reported earlier this month. I also heard that Turkey is going to do the same thing, calling it Turkcoin. So it's a matter of time till we have a lot of national cryptocurrencies. And here's an article from CNBC with their usual cryptocurrency FUD. Bitcoin is unfolding like the dot-com crash, just 15 times faster. So I'm really wondering if CNBC, the writer of this article, Kate Rooney, has actually taken a good long look at the Bitcoin charts and seen that it has crashed probably just like she says 15 times faster, 15 times. There has been so many Bitcoin crashes that you could consider it a crash, and again, it's your own opinion, if you will, on what it is. I mean, some people call it a dip. Some people don't want to call it a crash because some people consider a crash when it goes down extremely low. But what is extremely low? So it's all up to you to decide what that definition is. Bitcoin is behaving a lot like how NASDAQ did during the dot-com bubble nearly 20 years ago, but the timeline is unfolding much faster, according to research. The NASDAQ in 2000 and modern-day Bitcoin both rallied at 250 to 280% in their most exuberant periods. I like how they put exuberant in there of bear markets. Morgan Stanley said in a note to clients, just that the Bitcoin rally was around 15 times the speed. Sheena Shah, strategist at Morgan Stanley, said. I wonder who Sheena Shah's parents is. You know, when they had her, you know, they're like, all right, our last name is Shah. What should we name her? Sheena Shah. It's a great name. So, of course, Morgan Stanley is making notes to their clients to say, don't invest in Bitcoin because they don't own Bitcoin. And, like, I mean, that just makes sense, right? It's just like, you know, if you had a gas station, somebody just made a gas station across the road, and, like, every time your customers come in, you're just like, hey, don't buy their gas. It has a bunch of chemicals in it, and it's not good. It'll make your car explode. It'll kill your whole family. You know, and like to you know, because their prices are like 5 cents lower across the street. So like, of course. So these prices, you know, and similar behavior and trading volume could be signs that NASDAQ history is repeating itself, according to Shah. Bear markets for the digital currency are not new. Since it was created in 2009, Bitcoin has seen 4 of them. Yeah, more than that, with price drops between 28 and 92%. Shah said. Bitcoin's value has fallen roughly 70% from its peak near 20,000 in December to a low of 7,000. And on average, Bitcoin prices have lost 45% to 50% of their value in each bearish wave, which Shah said is similar to NASDAQ's behavior 18 years ago. So she could also say that, you know, on average, Bitcoin's prices have lost 45 to 50%. Here's good. I'm sorry, guys. Before I get into that, here's how you become a good journalist, a nice objective journalist. Instead of that, you would say on average, Bitcoin prices have lost 45 to 50% of their value in each bearish wave, and then went up 120% every single time. And then, like, that would be a great objective journalist, but of course not, because this is CNBC. The NASDAQ's bear market from 2000 had 5 price declines, averaging a surprisingly similar amount of 44%, Shah said. Oh, wow, because it's a coincidence, it correlates. Totally. Trading volume could be another red flag. Since December, Bitcoin trade volumes have jumped nearly 300%, Shah said, but each rally ahead of the bear market saw volumes fall. The follow-up rally for both Bitcoin and the NASDAQ always saw falling trade volumes. Shah said rising trade volumes are thus not an indication of more investor activity, but instead a rush to get out. Nice. It's like saying, hey, I turn on my car using the keys and then I go with the pedals. Good job. Good job putting that together. Like 2 + 2 is 4. Excellent job, Shah. Great. So, you know, I mean, what are you talking about? I mean, the follow-up for rally for both Bitcoin and NASDAQ always saw falling trade volumes. Yeah, that's because the price is going down, and yes, falling trade volumes. Good job. Like, what do you mean? Of course, duh. It's one of those things like oranges are orange. Like, good job. Morgan Stanley pointed out that changes in Bitcoin trading are not correlated to NASDAQ trends. Could be an interesting development. There have been historically 3 major currencies used to buy Bitcoin: the US dollar, Chinese yuan, and the Japanese yen. During the most recent bear market, a new digital currency called Tether ate up a bigger share of Bitcoin trading. Tether is a digital token the creators say is backed by $1 for every unit, meaning its market price is $1, and then theoretically should be more stable than most digital coins with huge price swings. The US coin Tether is not a major funding unit, but its increasing use is an interesting development. Shaw wrote, over the coming years, we think that the model focus could turn increasingly towards cross trades between cryptocurrencies and tokens, which would transact via distributed ledgers only and not via the banking system. Over the coming years, huh, Shaw? I think you're like 3 years too late on that, at least. So whoever's writing this article is just like, I'm gonna write something about Bitcoin, about hating on Bitcoin, and my bosses will love it, and I'll be cool. Bloomberg reported in January that the U.S. Commodity Futures Trading Commission subpoenaed Tether, the company that issues virtual currency. The company has come under scrutiny, and some are skeptical it actually has $2.2 billion on reserve. Well, you're not the only one on there. So this article is completely one-sided as usual. CNBC, congratulations for your journalistic integrity. Congratulations for not saying anything that, for basically saying that Bitcoin has crashed, numerous times. So if it's crashed that many times, then how are we at the price that we are today? Just completely ignoring that. Good job. Good job, CNBC. Well played. But I hope you guys enjoyed this episode. And as usual, we learned assuaged. Great, awesome. A word I've literally never seen. I'm a grown man, and I've never seen that word, so excellent. And then we've also seen some bad journalism, and we talked about Bittrex. So just remember, if you have a Bittrex account and you had some old altcoins on there or something like that, make sure you check that. And make sure you check that one of your coins was not that particular coin that I mentioned, or one of those 80 coins that I mentioned. And if so, either sell them or get them off that exchange, because on the 30th, they will go bye, and you will lose them completely. So hope you guys enjoyed it. See you guys next time.